right now, what we're going to talk about is how the Dow Theory works. And there's 6 main components of Dow Theory. So the first one, the Dow Theory operates on, which states that asset prices incorporate all the available information and that the market discounts everything, right? So earning potentials, competitive advantage, that which we know, right? That which would, rumor, what have you, right? When we look at prices in the market, right? Those prices explain pretty much what is going on, both what is known to the broader public and what's known behind closed doors, okay? So first tenet, market discounts everything. Second one, there are 3 primary kinds of market trends, right? So the market experiences primary trends which can last a year or more, such as a bull market or a bear market. And then within these broader trends, there are secondary trends that make up smaller movements, such as pullbacks within a bull market or a rally within a bear market, okay? And these secondary trends can last a few weeks, a few months, and then you have minor trends that can last a few days or a few weeks. Let's see here, accumulation phase, public sector. So let's take a look at this, right? So what I'm going to do in terms of, so you could have an idea of what a trend is. So I'm going to put it on the whiteboard. So right here, if we, let's see if I go here, right, and come across here, right, and I put on the horizontal axis time, T-I-M-E, right, and then we could say the price, in this case here we'll use the dollar sign, of a particular security, all right? So like we could use this as APL, I believe that's the ticker symbol for the Apple stock, right? And so when we talk about trends, right, is that you have, it's kind of like it goes, right, boom, 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 right? That's an uptrend, okay? And right now I got 1, 2, 3, I have 4, right? But generally what happens in the market, right, is that this first phase, so we'll call this number 1, right? Like those of you who heard me talk, right? There's people who follow the market and those people who make the market, right? So when it trends up, right, like along this lines here, right? This is kind of what you would see as a bull market, right? Okay. As it trends up, right? This first is kind of like, you think of a bandwagon, right? And you got people who you got the musicians on the bandwagon, and they beating the drums, and they're like, "Hey, everybody, get on board, right?" So this is the accumulation phase, right? The accumulation phase is like generally the first phase of the market, the first phase of a bull market, and generally that phase is highly influenced by the market makers, the ones who actually make the market happen. And they're the ones who are going to start accumulating, like if this was Apple, they will be accumulating a significant amount of Apple stock, right? And they're the ones who pretty much make the market work, right? And then what happens, right, is that they start accumulating, and then other people start coming in, right? Other people start coming in, right? And then you have this next run right here, right? And this is kind of what we call the intermediate phase, right? And this is where the public starts getting involved, right? And so the word gets out, right? Because generally, like even if we talk about what's going on right now, right? Even if we talk about what's going on right now, we've been in a bear market from like November of 2021. And so 2020, 2022, it was real rough for a lot of people, right? But now we're in 2023, And in 2023, right, it appears that this is what's happened so far, right? Now, it may be what they call a bear trap, right, or a bull trap, right? But right now, it does appear that we're going through an accumulation phase. And generally during this time period, the public is still have the trauma of the bear market, right? So a lot of people in the public, they don't want to participate. They're still thinking about, well, is there going to be a recession, right? But those people who make the market happen, pretty much they're making this market happen. So then, once the public gets get over their fear, then they start participating, then they come into the market. And so what you see is that we have higher lows, right? So this is a low, this is a higher low, this is a higher low, this is a higher low. And then you also have higher highs, a higher high, a higher high, a higher high. But what's really important is these higher lows, okay? And then what happens is that as this bull market goes from like a baby bull to a full-grown bull, right? Going through this process here, where the price, like if this price is, let's say it's $50, price goes all the way up to $150, right? As the general public become more aware of it, right? The general public starts getting involved. And generally what would happen is you get to the excess phase. So that, like this excess phase, like either here or either here, right? Those phases are when, that's kind of like when everybody is saying, you need to buy some stock, right? You need to get in, and then people get in not by doing their own work, but they get in because somebody recommended that they get into the market. Okay.